Existing loan stacking, particularly merchant cash advance stacking, but loan stacking in general, that can be perceived as a bad behavior of borrower. It's a serial behavior. If you're always going to stack credit, you might be rejected for a refinance. Why? The concern being, although you're saving $20, $30, $50,000 a month or less, could be $10,000 a month, the concern is you'll put that new loan at risk and jeopardize what they've written by taking additional debt that you can't service, that they have not calculated for. When you introduce stacked debt, when they're doing a debt service coverage profile and modeling, and they're trying to see your ability in liquidity coverage, your ability to repay, they can't take into consideration another liability that doesn't exist. They are plotting based upon the restructuring only. So that serial behavior of stacking and always getting more and more, especially in this market, has become a concern because it puts good paper, good lending loans at risk. In fact, this is the key reason that the SBA took a step back last year and they disallowed the refinance of merchant cash advances with an SBA facility. I think, again, and this is in my opinion, that many of these institutions didn't understand this mechanism, this predatory mechanism, the SBA banks. They didn't know how to measure the risk. And so they were writing policies at times that allowed clients or businesses, applicants, to effectively stack them. And so it's not the SBA loan that's the problem. It's the second, third, fourth position, daily and weekly payment behind the SBA loans that cause then a default on the SBA, which causes non-performance in portfolios. And there were several programs that unintentionally allowed this. And even programs that weren't taking into consideration debts that have 3 months or less remaining or less than 6 months in length. Those are some of the most aggressive, heavy instruments in banking. The most predatory are less than 6 months in term. So there were banks that meant well in policy and credit officers that thought the best at the board level perhaps, that weren't maybe in tune or as in tune as they could have been with these predatory instruments, which caused then some contagion in the portfolio level, which then the string of events is that you have a couple scenarios where merchant cash advance predators were targeting people that they would write the merchant cash advance to take advantage, to refinance themselves with an SBA to effectively generate interest. And so there's less value if you're only refinancing. There's less value to the business other than the savings. Whereas if you give excess working capital to a business, they can put that to work. It adds strength to the deal. If you're only refinancing, you're saving, that's great. But there's a delayed return on investment. It takes a couple months to really catch up. If you're saving even $50,000 a month, that second, third month, you really feel it. But you might still be in a cash crunch at close. You have no net new capital in your pocket. It's going to be savings is what you're going to realize in the coming months. And that's fantastic. It could be enormous. Like the examples that I've given throughout these videos, 10, 50, 100, saved hundreds of thousands of dollars a month through refinance. And that's great, but still had businesses that were in cash crunches. So merchant cash advances and serial stacking has caused a lot of problems, and that led to policy changes in SBA, unfortunately, very unfortunately, which I'm working very hard to create programs that aren't excluding businesses that need help, that didn't know any better, that aren't in tune with the SBA to even understand what that means, that they took an aggressive step to make these instruments ineligible. And you're busy running your business. That's what you should be focused on. So I want you to understand all of these elements and what occurred. Most of all, it's the behaviors. You're measured on your historical behavior. Serial stacking in this market particularly, always, but especially now more than ever, is viewed as a very negative attribute. That no matter how much money you get, it's never enough. You're going to be constantly looking for more and more and more. You should be growing the business. And I've been seeing, especially recently, that be a cause for many declines. And even some of these great programs I've been working with good institutions to refinance merchant cash advances, having a threshold up that, well, man, unfortunately, we've got to make a policy change. We'll make exceptions for you at times when there's a clear narrative and explanation as to why, but more than 2 MCAs, we won't refinance. It's because of stacking. And policy change is usually caused by paying somewhere. Something bad happened that you didn't do it. It's not you. And yeah, effectively, you've got to carry that. It's not your fault. It becomes your problem and our responsibility. That's the nature of banking. So when you hear something that doesn't make sense in banking, it's probably because someone, a bad actor, or just they got burnt by another loan. And so serial stacking is a bad behavior set that you will be measured by, especially in this market, which means you need to put capital to good use. And that's going to help you because they will ask, especially when you're refinancing, what was the initial use of proceeds? And they'll want to understand, how did you use them? And then if the initial use of proceeds was for one thing, one use of proceeds, and marketing, and you didn't market and you pulled money out personally, you know what's going to happen. It's going to cause more questions. So very important to be a responsible borrower and to be a performing borrower. And this is how you're going to get eligible and get approved and get the capital you need to scale your business.